Welcome to the webinar. Please stand by. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, thanks for joining us. It's about time to start Monday's office hours webinar. Before we get going, let me know in that chat if you can hear me and see that first slide all right. Thanks, Mike, Todd, Dave, Daniel, friends. So before we get going, I'm going to ask a question of the audience. Do you currently have an active subscription with us, yes or no? Something we ask before afternoon webinars. While you're voting, I'll just remind everyone that you're muted. Can't hear you. You need to use the questions panel to interact. If you have a question or a symbol you'd like to see demonstrated or spoken about by the presenters, you should wait until they're taking questions from the audience. All right. Otherwise, feel free to ask in the chat at any time. So it looks like almost 75% already have an active subscription. That's great. Those of you that don't yet have a subscription, keep in mind we do give out a discount code later on in the webinar. Quick question for the subscribers in the room. Are you on standard trade ideas or premium? If you're not familiar with the difference, premium's the version that lets you access the AIs, AI channels, auto trade AI strategies using Brokerage Plus, open up to 20 concurrent charting windows, backtest, access the RBI, GBI advanced windows, all that kind of good stuff. All right. So it looks like about 60% of the subscribers in the room already have premium. If you decide you want to do an upgrade, grab that same code we give out later on in the webinar and use that to give yourself an upgrade. Let me take that poll off your screen there. And as usual on Mondays, your hosts are Jamie Hodge and Steve Gomez. So we're going to record this webinar and have the recording up later on tonight or tomorrow morning. And you'll get an email reminder from GoToWebinar with a link to the playlist where you can find that recording. So I'm going to go ahead and start that off and let Jamie and Steve take over. Hey guys, what's going on today?
Hey, Scott, Steve, hello, and hello to everybody out there. Hello. Welcome. What's shaking over there, Steve? How's the weather in California?
Cloudy.
Yeah, we're getting a little bit of California weather here in Texas, but I'm sure it'll be freezing pretty soon. In any case, welcome everyone to the first edition of the Office Hours. Today's February 1st, 2021. I'll be your host, Jamie Hodge. Got my trusty wingman, Steve Gomez, resident as well. So before we get going here, just want to take a moment to get through the disclaimer here and let everybody know that all the information that we share with you guys in this webinar or any of the other webinars that we have coming at you on a weekly basis is strictly for educational purposes only. So if you need investment advice, what to buy, when to sell it, all that good stuff, please do yourself a favor and seek out a licensed individual, someone like a Series 7 stockbroker or financial advisor that can legally dispense that type of information to you. Always like to start off at the top of the hour here, talking about the community that we fostered around the great technology that is TI Pro. All kind of starts off up here in the upper left-hand corner with the trading room hosted by Barry Anderson. The cool part about the trading room, other than Barry, is the cost of entry, which is free. If you've done your shopping around online and checked out all the different trading rooms, probably realize that most of them worth their salt are not free. Is not the case here. Matter of fact, you don't even have to have a TI subscription to get in there and participate in the trading room. So it doesn't matter if you're a beginner, intermediate, or advanced. There's something in there for you. So if you haven't been taking advantage of the room, by all means, create a login, get in there, be part of the community. Mondays, you get myself and Steve for office hours. Steve's going to take the steering wheel on Tuesdays for the trade of the week. Mr. Andy Linloff's going to ride shotgun with him. Wednesday rolls around, bring in our CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams. Always fun with those guys, typically giving you peeks at new tech coming down the pipeline. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I'm going to ride shotgun with him. And of course, our ever popular daily support session which kicks off every weekday from 12 p.m. to 1 p.m. Eastern. The next slide you'll see will show you how to get there. This is a static URL down at the bottom. All you have to do is go to trade-ideas.com/live, bookmark that address, and it's the same bad time, same bad channel every weekday. So a great place to get your questions answered live with a nice visual. One of 5 different trainer people will be in there hosting each and every day. So it doesn't matter if it's something very simple or something complex. If it's TI related, that's a great place to go get your questions answered in real time. And of course, education, it never stops. And the TI University video series is a great place, especially when you're new, to get over that learning curve a little bit quicker. A wealth of information in these 4 videos, especially if you're new. 101, 201, 301, and 401. These are all available on our YouTube channel. And if you guys would give me a second here. Well, sorry about that. I got to turn off.
The Englishman?
Yeah, he's chirping in my ear. Now he's gone. Okay. Moving right along. Yes, these are all available on our YouTube channel, 101 through 401. So if you haven't sat through these and you've signed up recently, highly recommend it. I can get my pointer to work here properly. Always like to give people a peek at our growth in the form of Trade Ideas accounts, going all the way back to 2014 over here. And of course, one of the key pivotal moments is when we introduced our first AI module way back in the beginning of 2016. And you can see what has happened since that point in time. Second quarter 2020, we've had Q3, Q4, now we're into Q1 of 2021, and the trend is continuing. So we'd like to thank everybody, because without you guys, we wouldn't be seeing this phenomenal growth. Here we are, ladies and gents, to the topics of discussion today. Going to have a little of the same that we always do, talking about where the markets have been. And I don't need to tell anybody that last week was some crazy stuff that no one has seen before. And it's definitely had ramifications on the market. And of course, we're going to get on into Holly. Holly had a great day today. A lot of good trades in there. Some conservative, moderate spread to be had. There were some great add-on opportunities, and I think there was one good trade around. But before we get into that, how about I kick it on over to you, Steve, and we can take a look at the overall market action and the craziness that ensued.
All right. Make sure I'm off mute. Looks good. All right. So as usual, I'll talk just a bit about what's going on in the general backdrop of the market. You know, last week, if we just count back a few days, we had a market that just was just above all moving averages and never really found a reason to want to go down. But as I said, you know, there are goofy things that can always creep up, black swans or what have you. And like Jamie just said, what we saw last week was really unprecedented for a lot of people. Had not seen that kind of stuff before. So that kind of put the market on notice that maybe everything's not as hunky-dory as you think. And the price action kind of confirms that jittery feeling out there. Big gap down and a close very low on this day right here. But let me just add, sometimes when the market is looking, I'm not going to call it a top, but I'm saying it's acting like it might want to be a short-term top here, and I'll explain again why. You know, the volatility increases. You get the chutes and ladders. For those that are over 45 years old, remember that board game, slides and ladders, and the volatility increases. And some of the most vicious rallies, this is the big point here, some of the most vicious rallies can occur in a changing market that might be getting ready to move in a different direction, because you've got all these people, the mentality of the herd here, bar a couple of examples we have back here of what we've got now. For the most part, the market did recover, but we've got a lot of people who are conditioned, and that's the operative word. They've been conditioned to buy these wicks, these bottoming wicks, buy the dip, buy these dips intraday, buy these dips right here, buy them up. It just works. Buy that one right there too. But eventually in that one, that stops working. and you can start to get some nasty bounce backs. And all it comes down to me right now is market's going to have to prove itself. It's definitely under pressure. It's guilty, in my opinion, until it proves itself innocent. And what do I mean by that? Again, these last 5 days here are a whole different ballgame in that we're closing now. Major, numerous closes, 1, 2, 3, 4 below the 10 and the 20. All right, these four. We haven't seen too many days where we've had 4 days close below the 20-day moving average. Going into the weekend was really ugly. I mean, we technically closed under the 50-day, which had not been done in a while. So that was a shot across the bow. But here's what happens. You get these vicious bounces. We had a very nice rally, if you want to call it today, or was it a dead cat rally or a dead cat bounce? The beginnings of one. I'll get back to that one in a second there. But I've talked about when you break those moving averages and then they try to bounce back up into them, it's almost like a net or a netting, or as I call it, the armpit. It's literally tucked up here under the armpit of these two moving averages. And what we need to see, what I need to see, is building, 2 or 3 days of closing back above those key moving averages. What is more likely to happen, in my opinion, is we're just going to get hung up here. Now, let's move over to this guy. The blue line that you see is a line that I've been using for a while. It's the 130 candle average for a 5-day average, which happens to be 130 candles on a 15-minute chart. And I like my 15-minute charts. And this blue line kind of tells me who's in control for the moment. It's not a macro picture, but it kind of waxes back and forth. And this was very interesting. On Friday to the T, sorry, that was Thursday, the 5-day average grabbed hold of the price and slammed it back down to a new low. Well, where did we bounce into today? Roughly under that 5-day moving average. We might be a little bit lower after hours. I don't know, but this is also, I think, significant. Let's move over to the Nasdaq and see how it corresponds to the Nasdaq. Very similar. And you can see today, if you guys were watching the Nasdaq and it was just grinding at this level for a few hours, that level just so happens to be that 5-day moving average. And so this is a perspective I like to use, the 5-day moving average. Sure, I could put it on here, but it would just get really messy and that doesn't tell me much. This is the perspective that's interesting. And for those that might want to do that, all you have to do is put a 15-minute chart together, go to indicators, add an RSI, and make that SMA, a simple moving average, and make that simple moving average a value of 130. And you're good to go. And you'll have this kind of a pullback, if you will. For those of you who live and die on each tick, you could probably do yourself a little favor to pull back sometimes and look at this bigger picture. It's definitely showing something. So I'm still in very cautious mode. Let's go back over to the Nasdaq's daily. Bit more of a bounce than the S&P put in, but then again, the Nasdaq has led us higher for the most part this whole time. But it did close above its 20, but look how it got kind of caught up there in that 10-day moving average. And then again, if we shift perspectives, we can see that 5-day rolling moving average kind of had a say in it as well too. So if the Nasdaq can start to build tomorrow and move higher off of this 5-day moving average, then a lot of the stuff I'm talking about here might be moot, but we'll see. My gut just tells me that what's going on out there with the Reddit and the short float squeezes and the craziness, this market might be ready for a shower. I've seen some very smart people that I saw out there saying, basically, don't try and make sense of this Reddit and GameStop stuff. What it should be telling you is watch your portfolio and get ready to sell. So I agree. That's pretty much all I got, unless you want to add to any of that, Jamie.
No, that's a good observation, Steve. I mean, there's rumblings under the current surface, so to speak. And
yes, I will. So I will talk about the trade of the week, silver. We can't, very interesting day. There's a lot to talk about tomorrow on how it gapped way higher than we thought, but I've got a lot of content to talk to you tomorrow. Let's get another day's worth of data in there and see if this tail can hold up. This volume is incredible. It's a very volatile trade and it requires a lot of moving space back and forth. So some people weren't really keen on the idea, but they don't have to participate, but I'll talk more about that tomorrow.
Good stuff, Steve. Good stuff. But yes, I concur. There's definitely, the whole GameStop short squeeze bonanza has definitely caused some volatility.
Let's do one more thing before I give it back to you once my system unfreezes here. Since I was talking about the 130 average, that puts a lot of perspective into GameStop today. All right. And what I mean by that is coming into, midday, boom, for the most part there. And then an attempt here, but we're fading. So I think the game stoppers have lost their 5-day average. That's not good. And, people are, YOLO, I'm in it forever. And then they secretly, they go and they hit the sell button and they take the profits. It's not very hard to keep everybody in the trade. But the point is, once that was broken, and I think it was, this is the next support level. So I think, I just feel like that's in play for GameStop, something like that tomorrow, if anybody's interested. All right, that's it.
Yep. Looking a little grim for the longs in GME. Okay, let me grab it back here. Very good. Thank you, Steve. Good stuff as always. And just along the same lines there, just happen to put in a few arrows here. The first arrow over here with the wick candle is the 25th, which was approximately 1 week ago in the last office hours. And then, everything looked green. We got that big wick on that candle. Then we got a higher, a higher all-time high. But then the next day we got the big gappy. So, Steve and I were talking about the whole GameStop fiasco, but I just kind of want to put things in perspective here just to refresh everybody's memory. Here is the 25th candle on GameStop. Okay. So, it seemed at that point in time last Monday, that's when the big surge hit. And, you've heard myself, Steve, Andy, Sean, everybody talk about short squeeze windows. Steve's the one that authored, I think you authored Squeeze Me, right? The top list, Steve. And, everybody's always looking for that nice short squeeze, and they'd come along every so often. And it was always great if you could get in there and participate when the squeeze actually occurred. But to see the squeeze mania that ensued after GameStop, because everybody started hopping on all the highly shorted floats, so they all went together in unison. So anytime you have that, flipping back over here to the SPY, it looked ready for liftoff. We did get a new high, and then the madness ensued, and then we had this downside action here. So couple of different theories out there, but they both kind of make sense to me. And that is, when you have such huge moves happening on a heavily shorted stock, and you got people like the big hedge funds taking it pretty hard. Okay. You saw the whole Robinhood fiasco where you can only trade one share of GameStop. They're having to raise money in the amount of billions. Okay. So what happens when people start wanting their money out of these funds? Well, they have to liquidate, and they typically have to liquidate some of their higher quality profitable positions to accommodate those liquidations. Right?
A good point that goes right with my thesis. I forgot about that, Jamie.
Right. So you got two sides of the coin. One side is, especially, I'm sure everybody's been reading the same stories that we have. I was exposing the dark underside, the dark underbelly of the securities world. And I think that's true, only because I've been in the business, just as Steve has, for a very long time. We've seen a lot of kind of shady stuff. But it doesn't matter, because whether you think the market makers or the hedge funds colluded to bring prices down in hopes of GME and all these other highly shorted stocks that have been ripping up, bringing them down, or whether it's the liquidations, it doesn't matter. They're both valid theories, and probably a little bit of both is true. So definitely fitting the definition of what we would call a black swan event. Just one that it would have been hard to predict something like this, just as they all are. That's why they call them black swans. They come out of nowhere. But this has definitely been some of the most ground-shaking activity that we've ever seen. Now, having said that, is this the beginning of the end for the markets? Or, is going to be boom, boom, boom. In 5 trading days, we're going to be pecking at highs again. Well, from a technical standpoint, as Steve just pointed out, things aren't looking that good. But we did have some nice upside action today. And I don't want to sit here and talk about GME all day. But wow, what a week. What action. So let's get on with it here. So we did have a small gap up today. And we can see right here, the first 15-minute candle had a little downside swoon in that second 15-minute, 30-minute period. And then click, 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 10 period was in control pretty much all day up until the close. How did the compare count readings look today? Well, they were pretty much right on the money. Typically, as I like to say, I like to see something above 55% one way or the other, whether it's an upside or a downside bias. We came in at a nice cool 57% today after the first 15 minutes. Got the little bottoming wick here, which is not necessarily a bad thing, followed by another one. Sellers just couldn't keep it down here, and then boom, 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 grind up for the rest of the day. What do we finish on the SPY? Up 1.6%. So not a bad day. Now, is it a dead cat bounce, or is it the recovery that everybody's hoping for? Unknown. We will just have to wait and see. But not a bad read from the compare count today. Now, got some cool stuff to share with you guys today. But first, we got to talk about Holly, because Holly put in a pretty good performance on 13 signals. And we're going to talk about the three things that we normally talk about today. Was there any conservative moderate spread? A little. There were add-ons, and there was one decent trade around. So let's dive into the Holly blotter here. Hopefully everybody can see here. I've got all of the trades on the All Trades blotter here. So first and foremost, we usually just dive into the conservative and moderate profit spread, if there is any. And we can see the bigger winners today. Let me get my pen here. Conservative, moderate spread. Don't really see a whole lot of spread here. See some nice gains in double M, 292 in conservative, 281 in moderate. We got $190 in conservative on VTR. A little bit more here, but not really the things that we like to look at. Now, DD, we got a nice juicy spread in DD here. So let's take a peek at it. So DD was also a short play from pullback short. And here we are. Let me get rid of my post market there. All right. So not a bad entry right here. Holly calling it right here at the 75.50 level. Get in the money a teensy-wincy bit, but we're pretty much hugging that entry line for about 45 minutes, and then we get what we came for. We get the drop. Now, I've taken the liberty of drawing a line because that wick there on the opening 15-minute candle is the true opening low. And what do we have here? We got a nice statistical entry from the AI. That's gold star number 1, followed up by a secondary pattern that might emerge in the form of an opening range break, which did occur right here in this 15-minute candle where I've got the orange arrow pointing. So this would have been a great opportunity to add to the position. We're in the money here, enjoying a nice grind down. We break that opening range and we trend lower. So that add opportunity occurred right there about 73.50, let's call it. And then we had a low right about the 71.84, I think 71.88 to be exact. So some nice room and an excellent opportunity to add to that position. So how was the volume in double D today? And you can see right here, finished just shy of 5 on the relative volume scale. So all three things were lining up today for this double D. Number 1, statistical viability brought to us by the AI, the potential for a secondary pattern to play out, which it did, making for a great add opportunity, coupled with pretty massive volume today. When you got those three things in your favor, things are looking good. Doesn't guarantee success, but many times these trades work and give you the opportunity to add to the position as well. So a great add opportunity in DD, coupled with a juicy conservative and moderate profit spread here. So you can see Holly pulled the plug pretty quickly here. I think the exit, yeah, right on the money, flatted the trade. And you can see what would have happened had we just stuck to our original stop, held it, would have been a nice profitable trade with add-on potential. So big difference there between 0 and $1.55. And keep in mind, that's not adding to the trade. So the potential there was more than we see in the moderate profit column. So that's about the only decent spread. Now, I take that back. I mean, 22.50 and 73. I mean, we're looking at a 3x multiple there, even though the numbers aren't that big. And by the way, all of the numbers that you see reflected in my blotter here are based on risking $100 per trade. So not bad on Snap. Coming late in the day, right after coinciding with this opening range break here, which I also like. Volume not quite as big in Snap, only finishing the day at 1.33. But we can see here, Holly rides it up to here, just pulls the plug. More than likely a little, oh no, that was actually a timed exit. Okay, so just doing what she was programmed to do. This kind of looks like what would typically be the case in a profit save, but the timed exit came. All we had to do is be patient and go, you know what, this thing's grinding up all day. We're getting a little sideways consolidation, which isn't necessarily a bad thing. And then we finish higher going into the close. But what a nice tame little area. Even, for you scalper oriented people, if you're holding till the end of the day, what a great little opportunity to play this range break here for a little bit of extra sauce at the end to finish off the day. I don't know what happened there. My blotter blinked out, but it seems to be back now. So even though the numbers are small here, not a bad spread between conservative and moderate. And once again, just to reiterate, all you have to do to take a little bit more risk is ignore the AI's exit signal, assuming you like what's going on with the chart. The case for Snap today was smooth sailing. Once again, that 10 period, which is the green line, in control all of the day. Now, let's go back to these larger winners here because they also presented some very good ad opportunities. And I think for those of you who are familiar and have seen this time and time again, just like I have, you know exactly what is lined up here. All right. What a beautiful signal from Holly right here at 1380 after we've had 1, 2, 3, 4, 5, 6, about an hour and a half of sideways action from the open with a little bit of a gap, not much. When I see these small gaps and these consolidations, my eyebrows perk up all the time, especially if we get the signal early from Holly, which we did here, 1380. All right. Check out how the volume closed in NMM, almost 7. All right. So the volume was there. We get statistical viability from Holly with the potential for an auxiliary pattern to play out in the form of the opening range break, which it does right here. So in the next 30 minutes, you had, boom, opening range break, a great opportunity to add to that position. And then the biggest move of the day occurring in the following 1, 2, 3, 4, 5, 6, about hour and 45 minutes. The biggest move of the day happening on that second pattern that unfolded there. So once again, you got 3 very positive things occurring: statistical viability, big volume, auxiliary pattern playing out for a nice add opportunity in NMM. Just a beautiful trade on the intraday time frame. Just beautiful. Also, VTR, more of the same, not quite as beautiful as NMM. Took a little bit longer to play out, but the story is the same. Basically 45 minutes in, we get the buy signal here, and then we consolidate sideways for most of the day. Not really getting down here and getting dangerous to the stop area, kind of ebbing and flowing through the entry line here. But what happens? That auxiliary pattern plays out once again. We get the opening range break later in the day. A lot of the times they happen early, but they can happen later, just like this one. This was also a great opportunity to add to that position. Statistical viability, secondary pattern unfolding, decent volume, not near what we saw in NMM, but a good 50% above average. And sometimes that's all it takes. So between NMM and VTR, some great ad opportunities. You could really leverage those trades. Same thing with double D, a little bit of short action on the block. Not bad for Snap either. Now, when it comes to trade arounds, we had an interesting one today in CIM. Now, keep in mind, these look like pretty hairy moves here, but when you consider the fact that up here, the buy signal came at 10.18 and the bottom down here was 10.02, that's only about a 16-cent range in there. So what happens here? We get the buy signal here. In the next 45 minutes, boom, we get stopped out. Happens, right? But then what did the stock do and how did it react the next time it encountered the stop area right here? Well, first and foremost, we got these wiki candles. This guy, at first glance, as this one was unfolding and these guys had not appeared yet, you're thinking to yourself, okay, that's kind of a bullish signal if I'm thinking about watching this one, but we can sit here and try to read the candles, or we could just set a price alert at the stop area. That'd be the simplest way to go about this and keep it on the radar. So we set a price alert through the stop area. It either gets back there or it doesn't. If it doesn't, who cares, right? But in this case, once we see, if we set that price alert and we see our box flash, we're like, ooh, CIM's made it back up to the stop level. And then we're seeing these two wiki candles in retrospect. That's definitely a sign that the buyers are trying to take control again. Then we get the we reclaim that stop area. And then basically we get one of the larger moves of the day going all the way from the stop area back to the entry and then higher, right? At that point in time, then it's just about risk management. Do you want to take it all? Do you want to try to keep half for a move higher? Which if you took it, great. If you kept half for a move higher, you made a little bit more heading into the close. So keep that in mind when you see the AI get stopped out. Never hurts to go in there and set a price alert at that stop area. Watch how the stock reacts around it. And if it gives you a setup like this or makes you feel confident, or maybe it ebbs and flows around the stop area, that's also a good sign too. So that's what we call a trade around, or what you might call, to use the parlance of Steve Gomez, the second mouse gets the cheese. And that's about it for Ollie today. Otherwise, we had a nice target hit in this ARQT, and then it was over and done. If you tried to hold it, it got a little bit messy, but a nice target hit before it got weak. All right, ladies and gents, we're going to move right along to the next topic here. I see a couple of questions coming through here. Mike caught FLGT. Good deal. Yeah, I've been seeing that one come through a lot. And Sanjay, I'm assuming your question is AI related, how it behaves with large cap company stocks. Well, we just have to go through and see what the market caps were, and then observe. Sometimes we get the higher market cap stocks coming through. Sometimes it's the low cap, but just keep in mind it's all dependent upon which strategy is producing the trade here, right, from the strategy panel. All right, so saw a question coming in earlier about something that I kind of teased last office hours, which was the scan that I was working on about predicting gap. And when I say predictive gaps, most of the time, if we just pull up the SPY today, yeah, we got a gap. And most people that play gaps on other equities are just playing the gap after it's occurred. In other words, okay, the stock gapped up a certain percentage or gapped down a certain percentage. I think it's going to fill the gap. I think it's going to have a false gap retracement, but we're playing it after the fact. So I got the idea in my head not too long ago. Okay, well, let's try to figure out a strategy and predict the gap with statistical viability, right? And I've been watching this window. I'll pull it over here and just kind of give you guys a peek and share my experiences with it. Like, this is a good example here, all right? Now, this one's not ready for prime time yet, and I'll tell you why. And by the way, we all know what the market did last Friday, right? So I'll just kind of squeeze it back to Friday, 15-minute candles, right? This was the action on Friday. Probably wasn't a very good feeling taking home long positions, okay? But I ended up taking home, I think this window produced 6 plays from 12:30 to the close on Friday. And, I went back and I reviewed the days and how did it perform when the market was down, which you'll see here in just a moment. But it didn't give me reason for pause. And I'm doing these trades on a micro lot in a commission-free environment. So I'm like, you know what? Real-time experimentation is the best, I think. So we can see here the performance over the past, and I think these are 40 days here. Oops. Oh, if I went to the right tab. Yeah, 40 days. Okay. So, not too worried, right? And keep in mind, I've been having to hit these manually. Okay. The entries aren't bad. Okay. Actually, because of the alert that I'm using, running down, which is looking at the 1-minute time frame for a quick move down on the bid, stocks that are going up take pullbacks. So I'm thinking to myself, well, in order to get better pricing on my entries, I'll use running down. buy a stock when it's pulling back. And I was very pleased with the fills that I've gotten on some of these things because I'm either getting the same price or a little bit better, right? So that's a good thing. Now, where the problem comes in, and this is going to be based on my exit. Of course, oops, I just ran the odds for the wrong. That should have been 1 day. Let me rerun these. We'll take a peek again. The issue lies in the getting out phase, okay? Because as you all know, we've just released E-Trade and Ameritrade brokerage plus versions, but there's still a little bit of bugs to be worked out. So the bottom line is this: until I can get access for my exits on, and once again, you'll see here at the open. Well, the open means the open. The open doesn't mean wait 5 minutes and see what happens, right? So you got to get out pretty quick. So I've been making good entries, but when you have to get out of even 5 or 6 positions on the open and you don't have a key that says, boom, get me out of all these guys, or throw out offers on all these guys, you can miss a lot, okay? So that's what I've experienced here lately. And by the way, I think I missed 1 trade. I took home 5 out of 6 on Friday. And of course, it looked pretty grim. But after everything was said and done, and I was able to get out of these manually, and I missed, I let some of my profits erode, I was flat. So that gives me confidence that the strategy holds up even when things look pretty grim in the market sense, because we all know that it doesn't matter. On a down day, there are plenty of stocks going up. When the market gaps down, there are plenty of stocks going or gapping up. But it's how do you find them? Okay. So this one is still a work in progress, and it's definitely something that you'll need Brokerage Plus to assist you in the exits with that functionality, right? Where we can just highlight all the longs and say, get me out. So until I have access to, Ameritrade in that capacity, because I've been doing all these on Tasty Trade where we don't have Brokerage Plus ported yet, but it's where I've been doing my labs or my experiments, for lack of a better term. However, this idea gave me the idea for what I'm about to show you guys today, okay? So I will keep you apprised of my work on this scan, or the same theory might have changed, might change by next week, right? But I'm still going to work on that theory. I just need automation on the outs so that I can do them all at once. But it helped spawn the thing that we're going to cover today, which is new optimization of an old favorite. And if you're new, it's going to be based on this window here. If you're a regular, you know what this window does here, okay? This window right here is spitting out movers each and every day. Some big movers, right, coming out of this new T high. I'm going to show you guys the original configuration. Simply a new high with a relatively simple filter set here. Looking for stocks with a float not to exceed 40 million and relative volume of 4. Now, I don't know how that got how this got plugged in here. That's usually not part of the native configuration. Just these simple metrics here. Max 50, volume today 100,000. Weeding out the ETFs with the earnings share. Got to be doing relative volume of 4 and a relatively smaller float, because we all know what happens when the volume comes into the smaller floats. So I'm thinking to myself, you know what? I see so many good trades coming through here, but it's hard to keep up with them. And on an intraday basis, if you're trying to trade them intraday, if you don't have that perfect setup, you better mind your P's and Q's, because they can move against you pretty fast. So I'm thinking to myself, well, Michael Noss dropped this strategy that he's been working on in the trader thread the other day, and had a 3-day hold on it. Man, it looked pretty good. And it was using an alert that I haven't used in eons, is one of the geometric pattern alerts, which I'm not going to go into detail about right now, but it gave me an idea. And that's kind of how the think tank works around trade ideas, is we're all kind of spinning ideas off of what we see other people do. And, that's kind of how the creative process works. So what I did is I optimized the new T-high window for a 3-day swing trade. And I'm going to walk you guys through the optimization process here. So what did we do first? Well, let me just check my settings here, make sure we're looking at the right thing. We're going to start 45 minutes after the open. We're going to shoot for a 3-day swing trade. Get me out at the open after 3 days. Risk management, you could put something in here, but it's when you're holding for multiple days, it's kind of pointless, okay? Because a lot of the times what we're doing on the open is pulling our stops for the opening 15 minutes if you're a stop person. You know, and that's different for each and every person. Typically, the only time I'm going to put a stop in is if I have to get up and leave. I don't want to take the risk of something going against me severely. Otherwise, I'm just sitting here watching my trades and getting out accordingly if those areas are breached. On advanced, we're just doing a 40-day back test. Nice and simple, right? So if we ran that scan, let me just make sure I did the alert swap there. Yeah, okay. So first and foremost, what I did is, okay, chasing these things hitting new highs, you know, because I'm primarily watching these for range breaks, which the new high does its job quite well. But for swing trading, if I'm chasing all these things, it's probably not going to work out too well. And I know that because I ran the back test. But stocks that are in play, especially doing over 4 on the relative scale for volume, they're going to pull back. They're going to pull back pretty good, right? That's what makes them so hard to trade on an intraday basis, right? This is the wiggles, right? So I'm thinking to myself, well, okay, let's use the running down now as our entry signal. So we're buying them. Maybe it's a small pullback, maybe it's a big pullback, but I'm a lot more comfortable making an entry on these stocks in the pullbacks than I am chasing highs. So first and foremost, just came in here, swapped out the new high alert for the running down now. Then what do? We just go run that back test. Let's make sure we got everything the same. Market close after 3 days, not putting a stop loss in play now. And then we run the scan. We really do need the Jeopardy music in here during these times, Steve. She's going pretty good today. The hamsters are well fed. You know, Robert, I could throw that one out there, but I don't feel the cake is not baked yet. So I really don't want to throw that one out there just yet. But if you're adamant about it, I will share it. It's not like it's a big secret or anything. I spoke too soon. Come on, you can do it. And what you guys are going to see about this optimization is it's relatively simple. So simple is better. Yeah, come on. Yeah, this reminds me of, you know, if you have kids and company comes over and the kids act up. Well, when you're trying to show and present in a webinar, you want to do a back test, the back test acts up. Okay, so not a bad scan, just boom, right off the bat, right? Using that running down alert with the existing filter set. So you're thinking to yourself, hey, that's not bad at all. Okay, but check out the trade count. A lot of trades, but that's not necessarily a bad thing. So it tells me there's a lot of meat left on that bone. So let's see what we can procure here. So the first thing I did is went to optimization. Not going to really worry about price and time of day just yet. Went over here, went to the 60-minute RSI. And let's see here. What did I do? 10 and 54, 59. Don't tell me that RSI is already in there. I thought I took that out earlier. Okay, my bad. We got to get rid of that. Okay, let's do it one more time, and hopefully the hamsters are nice and primed. But the bottom line is this. I only added 3 filters through optimization to the scan, and hopefully after this spin, we can get there. I thought that scan looked a little too good off the bat, right off the bat there, and it's because I'd left the original RSI setting in there. I must have saved the wrong one. Okay, still not a bad first time spin. So we go back to optimization. And let me just confirm one more time here before I. Okay, yes, this is definitely the basic filter set for that alert window. Now we came over to the 60-minute RSI. Where'd you go? There we go. Okay, let's chop it up into increments of 5. And then where did I go? 10 to 54.99. So what I did here, you know, this seems to be the curse of me and Andy. I wrote down these steps methodically, which one I did first, which one I did second, which one I did third. But this isn't looking like what I remember earlier. And I'm trying to figure out why. Let's go 10s. Because I wrote my settings down here, 10 and 54.99. Okay, well, we're just going to go ahead and plot on through here.
Can't help you.
I know. Don't worry. It'll be okay. All right. So just so you guys know, this was the first optimization that I did right here. Changed RSI to a minimum of 10 and 54.99. So I tell you what, since I'm losing my mind or there's a glitch, what we're going to do is this. We're going to back out of it. I'm going to duplicate this guy. We're going to leave the RSI setting in place so that we can then go on to the other 2 optimizations that I made, which was position in 20-minute range or 20-day range and the max price that you can see right here. Okay, so after the first optimization of 10 minimum and 54.99 on the 60-minute RSI, we got this. More than one way to skin a cat. I'm not sure where you're seeing hours of trading there, JJ.
Wasn't that in the setup of the scan? The hours you want to scan?
Oh, in the backtest settings. Is that what he's talking about?
I think so. Now it's gone.
He says right box. That makes me think of an alert, you know, this consolidation after X amount of hours or whatever.
Well, it did mean an alert, so I'm not sure.
Yeah, he's probably seeing one of the alerts that are not active. Okay. So after that first optimization there, and by the way, you're probably talking, JJ, about what you see here, right? And that is if we have a quality column in use, and we see a triangle bottom, it's going to tell us how many hours it took for that pattern to form. Right. Okay. All right. Back on topic here. After adding just the RSI filter, we reduced the amount of trades. We increased our winning percentage. And then upon the next optimization, let's see if it lines up here. Probably it won't, considering the way things have been going, is the price action. Okay, this makes a lot of sense here because what I did next is check out these levels here. Okay, Stocks, well, they're on a stocks at 0, but stocks at a very low price up to $4.99 have a very high profit factor, 3.4. 5 to $9.99 had 1.85, and 10 to $14.99 had 2.43. After that, we drop off severely. We get some pockets of good performance down here, but the trade count is insignificant. Okay. So I just thought to myself, hey, it just seems that this strategy does better if you don't go over $14.99. So that was the second optimization. Just capped it at $14.99. Easy peasy. Spin the wheel one more time. See how many trades we knocked off. See if we improve performance. And then we just have one more to go here, which deals with the 20-day range. Do a little time check here. Oh yeah, we're just enough time to get this done. Get the cloud link shared.
Oh, they want that cloud link.
And they shall receive it. Okay. So we knocked off another, well, let's just call it 500 trades, a little less than 500. We still got a nice equity curve. Daily's looking pretty sweet as well. And the last bit of optimizing I did, just pop back over here, went to the position filters, position in 20-day range. And I do believe
I have an observation about this strategy. It's done very well because the market has been also moving higher. So the strategy will, unfortunately, as they all do, degrade if the market falls. So be careful.
That is correct. And that's a good point, Steve. Never just jump blindly in. Tomorrow, obviously, if it's a heavy down day and you see these things coming through, you know, you have to get confirmation from a technical standpoint, right? Which is always the case. Little statistical viability coupled with some technical prowess, just like we were seeing in those Holly trades, right? But the bottom line is this. I mean, it doesn't take a big genius to figure out, I went right here. I'm just like, okay, it's got to be the right at it. You don't really want the ones that are underneath it. So if I go ahead and set a minimum of 0, and a maximum, I think I went down here to $79.99, capped it out here. Then that's the final product. So when we run the back test on the final product.
As you do that, Pedro is a star attendee. He asks, well, then could you not do the inverse for down days or down markets?
I was thinking the exact same thing, and I think you can.
Well, you would use the same approach Jamie's doing now, but you would flip that scan. You'd use the flip button to invert the whole scan and then start back testing that version.
Right, and I'm going to throw out a theory here. If I flip the scan and then short it, it won't look good, but if I go long, it'll still make money. Just because of the nature of the market. I mean, yeah, we're having some ebbs and flows, but we're not in a bear market yet. Okay, so here's the final product. Keep in mind, we back tested 40 days, 433 trades. So could be 10 trades, could be less. When we look at the calendar here, you'll see 8 trades, 4 trades, 11, 6, 12, so forth and so on. When we look at the daily, that's not a bad daily, okay? Few days in here where you lose. Notice the dollar amount. I'm only investing $1,000 per trade, and you're having some pretty good winning days. 1,700, almost 1,800 on the biggest winning day. Not quite 400 on the biggest losing days, but a nice winning streak. And the losing days typically come in pairs, or excuse me, increments of 1. So just as Steve was saying, it's been doing quite well, but it might fall apart. Any strategy could fall apart at any time based on market conditions. So one tell might be, hey, if this thing puts in 2 losing days in a row, that's definitely something that has not been happening, right? But in the meantime, what I will say is the relative volume about these things, okay? Could be a down day, but if we were to go back and look at what the S&P did on all these days, probably one of those days is going to be a down day. and it's the volume that's there that makes these things special. Okay, so keep that in mind, and of course, don't jump in blindly. Check out the plays as they come through. If they look good from a technical perspective and the market's not getting beat up too bad, it might be worth taking a stab at. All right, so here is the cloud link. Oops. There we go. What do we call this? High volume swing du jour. And there you have it. Let's see here. We got about 5 minutes. I'll tell you what, let's just do a quick little look-see here on that inverse theory. We're going to duplicate it. We're going to configure. We're going to hit the old flipperooski. And, well, did that flip it? Yep, it did. And backtest short.
Yeah, predict it's going to look like crap.
Mm-hmm.
Because of the backdrop of the market.
Mm-hmm. But then while that one's crunching, if we run the inverse long,
it will likely do better, but nothing close to what you came up with.
Actually, it's kind of gross too. But yeah, just flipping and going short. Not looking too choice here. Of course, we could get a surprise and see some big, huge spread between winner and loser, but somehow I doubt it. I think you'd have to start from scratch with the base metrics and running up alert and then re-optimize from that point on. Ooh. Yeah. And then if you're buying these, you're chasing. I mean, with running up, you're chasing even worse than you would with new high, right? Then if you're still trying to buy these, interesting. Lower win percentage, but there is a spread. Huh. What do you know? So if you invert it and go long, it still makes money, or theoretically, it still looks decent. So yeah, there you have it. But anyway, I hope you guys enjoy that. It's definitely one I'm going to keep my eyes on for the remainder of the week. See what happens.
Since you've done this twice now, I'm going to offer you a little something maybe to improve on it. It just kind of occurred to me that will help with anticipating gaps. That's the ultimate objective here, right?
Well, this window is not anticipating gaps.
Oh, that one's not? Okay.
This window is the anticipating gaps, which kind of gave me the brain fuel.
Okay, well, I have an idea for anticipating gaps.
One.
Yeah, we'll run with that for next week, perhaps.
All right, very good. We'll put that in the hopper.
Mm-hmm.
All right. Want to thank everybody for taking the time to pop in here and hear what we have to say. We know you're busy and appreciate it. So, Scott, if you're ready to let everybody know how they can save money on a new sub or perhaps on an upgrade, we're ready for you.
Yeah, right on. Thanks. Yeah, a couple things on the way out. Make sure you get our ebook, Earnings Season's Happening. So get trade-ideas.com/earnings. Download that. It's got some strategies you can import directly into your layouts. We also have a podcast. Go ahead and search for Trade Ideas Podcast wherever you listen to your pods. Make sure that you add us as a subscription and grab the newest one. There's an interview we just launched a week or so ago. So do check that out. And check out the previous episodes, and there'll be a new one coming out soon. As a code, opportunity, it's good this month. Save 15% off your first month or year of Trade Ideas. You can also use this to do an upgrade and save. You can find Jamie on Twitter at QuantBot. You can find Steve at Today Trader. Also find at Trade Ideas. Trade Ideas Pro is the Facebook handle. And send all your questions to info@trade-ideas.com. That goes to our help desk software and helps you get the assistance you need as quick as possible. So the recording will be up later on tonight or tomorrow, and you get an email from GoToWebinar with a link to the playlist so you can watch this webinar again if you missed anything. Thanks, Jamie. Thanks, Steve. Have a good one.
See you tomorrow.
Thanks, everybody. See you tomorrow. Bye-bye.